This decade has been a dismal one for the markets, beginning with the tech bubble. The market crashed after the 9/11 attacks and finally the Lehman collapse in September 2008. As 2009 draws to a close, Bobby Rebel of Reuters wraps up the decade for us.
Revelers are already gearing up to bring in the new decade, but for many investors it will be a decade they wish they could forget. The benchmark Standard & Poor's 500 is down about 23% over the last 10 years.
Well, it's the dismal decade because whether you go back to 1900, this is the first decade in which the S&P 500 lost money when you include dividends reinvested. Even in the 1930s, we were able to eke out a 10% total return.
The big catalyst for the weak returns were the two bear markets at the start and the end of the decade. First came the bursting of the tech bubble at the beginning of the decade, compounded by the recession of 2001. The September 11th attacks further wounded the markets. The next recession began in December of 2007, only months after the Dow set record highs. But by March of 2009, the market began to turn around and has been moving higher as the decade comes to a close. For investors, timing was key.
This decade has certainly been the buy and rent method of investing. We had a terrific run-up from 2003 to 2007, but if you didn't sell then, you had a terrible return.
One bright spot as investors ring in the new year, since 1900, the Standard & Poor's 500 has never declined 2 decades in a row.